Hey everyone, it's Josh over at Gulf Coast Community Federal Credit Union. Thanks for joining us today as we continue our mortgage video series. Today's video is going to be about PMI, private mortgage insurance. PMI is one of those mortgage terms that you hear, but may not know exactly what it means. We here at the credit union want to help our borrowers understand the home buying process, and part of that is understanding what PMI is and how it works. Now, PMI stands for Private Mortgage Insurance, and it's added to some mortgages to help lenders or investors reduce any potential loss in the event the borrower does not repay the mortgage. Basically, PMI makes it safer for a lender to lend, because if the borrower does not repay the mortgage, the lender does not suffer a complete loss. The PMI provider shares in that loss. Now, PMI is added to conventional mortgages like a monthly fee. It's included in the borrower's payment. This amount varies depending on several things, like credit score, loan amount, and even loan term. PMI can also be affected by loan to value, meaning how much of the value of the home is tied up in the mortgage. Now, usually PMI can be waived if the borrower's down payment is 20% or more. This would mean that the loan to value is 80% or less. If the borrower does not put down 20%, the amount of PMI will vary based on how much they did put down. For example, a borrower that puts down 15% will make their LTV 85% and likely have a lower PMI amount than a borrower who only puts down 5%, who then has an LTV of 95%. PMI will be set up at the beginning of the mortgage, but borrowers will not have to pay it for the entire term. PMI can be removed a few different ways. Once the borrower has paid down the loan for 2 years and the loan to value is below 75%, or once the borrower has paid down the loan for 5 years and the loan to value is below 78%, or if the borrower requests an appraisal and that shows the value of the home has gone up since the time of purchase and makes the loan to value lower than 78%, or even if the borrower has reached the halfway point of their term, like year 15 of a 30-year mortgage, even if the loan to value is still over 78%. If you're interested in learning more, or you would like to purchase a home and you're wondering if you'd qualify, please reach out to us. Thank you for joining us as we continued our mortgage video series with today's video about PMI. You can like and follow this series to learn more about mortgages, and you can find us at GulfCoastCommunityFCU.com. Here you can join our membership or apply for a loan. Also follow us on social media. We are on Facebook, Instagram, X, and YouTube.